Good morning. It's Thursday, August 29th, about 6 a.m. Central Time. Overnight, we're seeing a relief rally in the precious metals after yesterday's aggressive sell-off. Many of you working with me or following me were anticipating this correction in order to time the roll from September over to December silver, and we're able to do so by successfully selling September silver above $30 while buying the December contract well below $30. For those of you on our wealth management side, we trimmed Nvidia stock well ahead of the earnings announcements and used the proceeds to add some downside protection in the QQQs. For those of you interested in wealth management solutions, my partner Bill Baruch, he'll be on CNBC for the full hour block at 11 a.m. Central Time on CNBC's halftime show. Now looking at the overnight price action, we've got December gold up $17 at $25.55. December silver up 31 cents at $29.93. December copper slightly lower. That's the one that I'm most concerned about at about $4.21 right now, so it's down about a penny. And then finally October platinum up $6 at $9.43. The other standouts here, a little bit of a bounce back here in Bitcoin, crude oil, the dollar index, and also the U.S. equity markets. Now the U.S. equities are slightly higher after the markets look past Nvidia's disappointing forecast. Remember, if you look at the numbers on the surface and you look at what these guys report, they say, hey, it blew away expectations. It was well above this. It exceeded the forecast and things like that. Remember, when it comes to stocks or anything else in commodities, it's always the rate of change. So you want to see these blowouts get bigger and bigger and bigger, not it blows out, but it's smaller and smaller and smaller. That's why the stock market sells off. That's why when we look at things like USDA reports, or we look at, mining production levels for copper and silver, or the demand structure, we want to see that continue to widen. Like if you look on silver, I'm going off a little bit here, but you go at silver, you look at solar demand, it was basically 60 to 100 million ounces a year for a good 5 years. And then all of a sudden you get to 2020, 2021, you get some green energy initiative and policy, and that number starts going up. And that's where you see kind of the wind behind the sails of prices going higher. So a little bit going off here, but the markets are going to turn their attention towards the macro outlook and the data, which could indicate the depth of the Fed's expected rate cut. Remember, we want to see the Fed go on a numerous interest rate cutting cycle. That's what will get your gold up to 2,700 to 3,000, and it gets your silver up to 35, 40, 50 bucks. You don't want to see the Fed do a one and done type of deal. So you want to pay attention to inflation inputs that are out there, such as crude oil. And that's why it's really important to look at all the commodities. There's only about 27. It's not like me asking you to look for 5,000 stocks or keep an eye on those. So the markets are betting that the Fed will do 100 basis points worth of cuts by the end of the year. The uncertainty remains about whether the Fed will ease 25 or 50 basis points at the September meeting. So you want to go to the CME's Fed Watch tool. That's what I generally use, and it's a 65% chance that the Fed will cut 25 basis points and a 34% chance that the Fed will cut 50 basis points. That's basically in line with where we're at, but about a week ago, we are tacking on more of those chances that they do cut 50 basis points. Now, today we're going to see a whole bunch of economic data. So if you were at all uneasy about if you have too much of something on, too much like silver or gold or something like that coming, or the equity markets coming into, you have the relief rally, so they're basically opening up the door and saying, hey, you can go out if you want to. We do have a bunch of economic data coming out. So we've got GDP coming out, expected 2.8%. Unemployment claims, that's the one if you're watching, if you're a precious metals trader, you want to keep an eye on. The number was flat at 232,000. So we want to continue to see that hitting those upper boundaries, and it'll show the deterioration of the labor market. And that's what really causes the Fed to panic and start to cut more aggressively and more times to help support it, because they need the labor market to be, we need the labor market basically in order to function as a society. So we also will have a couple other things here. We'll have one speaker coming out, a Fed speaker, but that's not till the afternoon. And then if we can get past that, all eyes are on tomorrow. We've got a bunch of data coming out like core PCE and things like that. Now you go to the technical side of the precious metals, and if you look, The only one that's truly long is the gold market. Silver had failed and also copper had failed at resistance points. So I'll give you the point on the copper, 432. You got to break above that in order to capture the bullish trend. The bear side of things, and we're hugging the 200-day moving averages, if we break below 412, it'll shift back to a bearish trend. The silver market, 30.56 is where you want to see that market break above, and we're hugging the 50-day moving average. 28.66, we don't want to see that at all. 29.06, we don't want to see it break below there. Chances are we're going to wash back out, go down to the 200-day moving average. And then finally, the gold market, that's the one that people are really actively adding on any kind of correction, and then they're kind of waiting for the breakout to new all-time highs. So, and I see why they're doing that. But if you got any questions, give me a call. If you want to talk about having a broker-assisted account, working with us kind of loosely, if you want to have an account with us and then also just check in from time to time on some of our ideas, if you want to have we have a CTA where we do all the trading for you and everything else, you just monitor the performance. And then if you want, on the equity side, we do have a mining, a metals, an energy bucket that we do put in with our wealth management side with those particular portfolios, so you won't feel like you're missing out on the commodities exposure. We could discuss that as well. Give me a call, 312-858-7303. Remember, futures and option trading involves risk of loss, may not be suitable to all investors. Good luck, good trading.